markets in a minute, our weekly recap of what's happened in markets over the past week. Markets took a bit of a break this past week with US equities delivering mixed results, cooling after 3 strong weeks. The Nasdaq up 1.5%, boosted by semiconductors, with the S&P 500 slightly higher and the Dow Jones slightly lower. We saw oil volatility returning as energy markets reacted to renewed geopolitical uncertainty. Oil rose from that $83 a barrel to $95 a barrel, still below the $113 year-to-date peak. And in terms of earnings, we saw growth remaining heavily skewed towards that mega cap, with the Magnificent Seven up 22%, and the rest of the S&P 500 growth, though, only averaged at about 10.1%, which highlights that continued market concentration. Growth stocks still continue to outperform value stocks, with growth leading at 16% for the past 4 weeks, value only up 8%, narrowing that year-to-date advantage that value had. We saw retail sales improve by 1.7%, the fastest in 3 years, largely driven by those higher petrol prices. Consumer sentiment, though, remains weak, with confidence continuing to slide, pressured by inflation and geopolitical risks. In terms of the bond market, we saw income markets soften slightly, with the 10-year Treasury up 4.3% from its 4.24, still below that 4.44% peak, reflecting that cautious positioning ahead of the next Fed meeting, with a 99% probability that rates will remain unchanged.